but numbers flowing in thick and fast. We did allude to the AGI Greenpac numbers. Let's welcome the management themselves. AGI Greenpac reported the first quarter numbers. The lower gas prices have boosted their margins in the current quarter, but the revenue growth was slightly weaker. We have Sandeep Sikka, the group CFO, joining in. Sandeep, always a pleasure speaking with you. And that really was the first concern. You know, the revenue is growing at just 7%. This is much below your expectation or guidance of 15 to 20% growth for this year itself. Can you still hold on to the guidance that you had given for this year? And what explains the weakness here?
We are still holding on to the same guidance, but if you see the notes to the results, during the quarter one, even in the last call, we have informed that there is a shutdown of one of the furnaces, and because that's a regular maintenance of the furnaces every 10 years. So we completed that in a short span of time of around 70 days. So as a result of which we lost around 25,000 tons of sales during the quarter. So that impacted, and it's well explained in the notes. Actually, if you see, we are continuing the momentum of growth, and the guidance which we are given around 15 to 18% growth in the company, we are still continuing with it.
All right, valid clarification then, Mr. Sikka. So that explains why the first quarter was softish, but you're holding on to your guidance. What about margins? Yeah. That's the bright spot, right? Quarter one margins coming at around 24%. Earlier, you were talking about 21 to 23%. You want to up that number?
We're still holding on the margins also. Market demand is good because despite the furnace shutdown, if you see, we were still able to maintain a growth as such of around 8%. The current margins, which are in the range of 24%, we should be able to hold on for the rest of the year. We are very confident about that.
So you've basically upped your margin guidance from 21 to 23% range to 24% that you posted in the first quarter itself.
Yeah.
All right. And what about... Go ahead.
Yeah, please.
Yeah. So, and what about the capacity utilization? I mean, Telangana plant came on stream during the quarter. What capacity utilization is that plant functioning at? Overall utilization was close to 96% last year.
So if you see, one of the reasons of margin expansion is that we have been able to really utilize our furnaces very well. Few of our furnaces, they are operating at even beyond 100% right now. The new capacity which we did for 154 ton, which is a high-end glass furnace, there we still have a capacity utilization of 70%. That's a new furnace which has come up. And during the year, I think we'll be able to load that furnace also.
Okay, all right. Could you tell us what's the update on the approvals for Hindustan National Glass acquisition? How much longer do we have to wait before all the approvals come in?
We feel the matters are pending in NCLT and Appellate Tribunal. We feel that in the next 3 to 4 months, most of these proceedings should be over, and after which I think we can immediately take over the plant.
The benefit of the plant ideally comes to you from FY25 itself, right?
Yes.
And
major part of it. If the acquisition happens under the IBC process, we feel either in the middle of the quarter 3 or in the, we should complete it. And the major chunk of full year benefit should be financial year 24-25.
And how long before you get the plant up and running? Because the last time you joined us, you said 500 to 700 crore worth capex is needed for that plant as well. So assume you get it in the middle of the third quarter. How long does it take for the plant to become, up and running efficiently?
As per our information, because the process is IBC process, so we have to rely on the public information. The plants are still running. And Hindustan National Glass for quarter 4, they had declared an EBITDA of around 58 crores. So the plants are running. It's only that the plants are running efficiently. We need to invest to make them, bring it to our standards.
Okay, so this Hindustan National Glass, you had told us that it could have peak potential of around 3,000 crores. So assume that, going by the current run rate, I mean, you're talking about 3-4 months or so, we're going with those deadlines. The full benefit comes in FY25. So what kind of revenues will you realize from this acquired unit?
So I think the combined entity should be around 5,000 crore plus in that particular year.
And out of the 5,000 crores, how much are you counting from this acquired asset?
Around 3,200 crores, depending on, what time we get, what is, and how much, we invest in the first year for furnaces, maintenance, and there would be some shutdown.
So you're saying it'll ramp up fully in FY25?
Not fully. It'll go stage by stage because we will be investing funds every year to reline the furnaces and bring it. It's not that
Right.
we'll be investing everything in the day zero.
Mr. Sikka, just to clear the air, the peak potential for this Hindustan National Glass is 3,000 crores, right?
3,000 to 3,500 crores of turnover.
And in first year, you're saying at least in FY25, 3,000 crores could reflect at least out of the 3,500 crores.
Yes, we should do that.
Right.
And you will break even within 6 to 9 months of starting, of commissioning the unit.
So as I said, they are already EBITDA positive. So, if you see on the EBITDA side, the operations are already positive as per the published results on Q4. So it's only that how we enhance the profitability by investing into the furnaces and improving the productivity.
So how much more is the synergy benefit that you can derive out of this? 3,000, 3,500 crores, the revenue band that you're looking at, they're already profitable. Your own business does about 24% margins and likely to increase given, the increased contribution coming in from Telangana plant. You said almost 100 basis points. So how long before this 3,000 crore comes to that 25% mark as well?
So if you see historically, our margin profile as compared to the other competitors' margin profile, we have always been around 8 to 10% higher as compared to most of the competitors because we invest into the furnaces and we run it very productively. So it may take another 3-4 years to bring these furnaces, all of them, to our standards, as such. So maybe like 5 years down the line, we'll see the combined entity basis EBITDA margins ranging 22 to 24%.
So since you've given us a target of 5,000 crores for the combined entity by the end of next year, let's expand it a little further. You, I presume, would be having some capex plans yourself as well. By when do you hit $1 billion in combined entity revenues? And if and when you do, can we expect the margins for the combined entity to be between 20 and 24%?
I think it will take another 5 to 6 years so that we touch $1 billion as such, because right now the market demand is strong. And AGI Greenpac can do its own capex also maybe 3 years, 4 years down the line. But at least for the 2 to 3 years, we will have a good, appetite in terms of our expansion within the capacities which are available as such, which needs to be debottlenecked and to be fully operational.
And margins for Hindustan National Glass would be how much? You said you're 8 to 10% above the industry. So should we assume that they, for the first couple of years, will do around 15 to 17% margins?
Ranging between 15 to 20%, that's our estimate. Once the furnaces slowly gets, upgraded.
Got it. So, Mr. Sikka, 5 years down the line, 5 to 6 years down the line, you'll be $1 billion revenue company with margins of around early 20s, at least 21 to 22% on a blended basis, right?
Yeah, that's what we're working for.
And peak debt level at those at that $1 billion would be what?
So if you see 5 years down the line, the debt level should be odd, let's say 500 to 1,000 crore, depending, how much we invest and, where we invest. So it's I can give more guidance on the sales and EBITDA rather than on the, the debt level right now.
All right. So we got a broader time horizon as well. Thanks so much, Mr. Sikka, for joining in. So the first quarter was hampered because of a shutdown. One of the furnaces was shut down. But you're confident that you'll make that up. And that's where you're guiding for mid-teens revenue growth with margins of around 24%.